Every empire conquers twice, once with armies and once with debt. The first victory takes land. The second takes generations. And while history remembers the battles, it forgets the loans that followed. But those debts, not the wars, are what truly decided who ruled the world. Rome did not fall in one night of barbarian fire. It fell quietly, through the slow decay of trust, the currency of all civilizations. When the silver mines of Spain ran dry and the empire's wars demanded more coin than the treasury could hold, emperors turned to a dangerous invention: debt. To pay soldiers, to build arenas, to buy loyalty. The empire borrowed from its own future. The Roman denarius, once nearly pure silver, became thinner, duller, lighter. Each new coin carried a little less truth than the last. At first, no one noticed. Then prices rose. Merchants demanded more coins for the same goods. Inflation wasn't a word then, but its pain was real. And slowly, faith in Rome's money, the empire's heartbeat, began to die. But the Romans were not alone in this mistake. Centuries later, in the Byzantine Empire, the same story unfolded in gold. The solidus, once trusted across continents, was gradually diluted. The golden promise of Byzantium turned pale. When the merchants of Venice refused to trade for Byzantine coins, it wasn't just currency that had failed. It was the empire's credibility. The lesson was ancient and simple. When a government discovers it can create money faster than it can create value, collapse is no longer a risk. It's a schedule. And yet every civilization since has believed it could outsmart that truth. In the 17th century, the Dutch Republic created the first modern bond market. Investors could lend to the state and receive interest. A brilliant idea at first. It financed global trade, exploration, and the birth of capitalism itself. But it also created a new addiction, the illusion that debt equals growth. The British Empire mastered that illusion. While other nations fought wars with armies, Britain financed them with credit. The Bank of England, founded in 1694, was not a warehouse of gold. It was a warehouse of promises. Those who controlled its paper controlled the empire. Colonies that borrowed in pounds were caught in invisible chains. Their crops, their railways, their governments, all mortgaged to London's banks. When independence came, the debt stayed. Freedom was declared, but the interest never stopped. The pound sterling became the 19th century's most powerful weapon, a coin that conquered where cannons could not. Britain understood something Rome never did. You don't need to occupy a nation to own it. You only need to lend it money. Then came America. When the U.S. replaced Britain as the world's economic center after World War II, it didn't build colonies. It built contracts. At Bretton Woods in 1944, the dollar was crowned the world's reserve currency. Every major nation tied its money to the dollar, and the dollar tied itself to gold. But by the 1970s, the system cracked. America had printed more dollars than it could ever redeem in gold. President Nixon closed the gold window, ending the link. Money became faith again. Faith backed by nothing but government promises and military strength. From that day, the empire of debt was reborn. The dollar was no longer a representation of gold. It was gold's replacement. And the world, willingly or not, entered the age of the petrodollar. Oil was priced in dollars. Nations needed dollars to survive, and so they borrowed them. But debt is a quiet conqueror. It does not march, it multiplies. In the 1980s, Latin America's lost decade began when U.S. interest rates rose. Countries that had borrowed heavily in dollars suddenly faced impossible payments. Mexico, Brazil, Argentina. Entire economies collapsed under the weight of loans that could never be repaid. Who profited? Not the workers, not the farmers, not the children who grew up in austerity. The creditors did. Foreign banks and institutions that collected interest long after hope had died. The weapon was elegant. You lend in good times, you collect in crises. and when the debtor cannot pay, you buy their assets for pennies. It was not imperialism by flag. It was imperialism by balance sheet. The 1997 Asian financial crisis revealed the same formula in a modern disguise. Nations like Thailand and Indonesia had pegged their currencies to the dollar. When confidence cracked, their currencies collapsed overnight. Debts doubled in cost, factories closed, jobs vanished, and yet, as economies crumbled, foreign investors swooped in to buy their industries for a fraction of their worth. For every collapse, there was a collector. For every ruined nation, a richer creditor. Debt, once a tool of survival, had become a weapon of domination. But the story of debt isn't only global, it is personal. The same system that traps nations now chains individuals. The average modern citizen is born into debt before they even earn a wage. Student loans, housing loans, credit cards, promises stacked on promises, payable only with decades of labor. We are told this is freedom. But what kind of freedom requires 40 years of payments to achieve security? What kind of wealth is measured in liabilities? The truth is uncomfortable. Debt has replaced slavery. Not through whips or chains, but through contracts, interest rates, and social pressure to consume. You are free, but only as long as you keep paying. And yet, debt is not evil on its own. It is a mirror. It reflects what we value, what we fear, and what we refuse to face. Governments borrow because citizens demand comfort now and accountability later. People borrow because the system teaches them to spend before they earn. The cycle continues until confidence runs out. And when that day comes, history always rhymes the same way. First disbelief, then panic, then collapse. In 2008, the global financial system nearly died under the weight of its own excess. Trillions in paper wealth vanished in weeks. Banks that claimed to be too big to fail were saved, not by merit, but by money printed overnight. The savers paid for the gamblers, and the gamblers survived to play again. The debt didn't disappear. It was transferred, from private balance sheets to public ones, from corporations to citizens, from Wall Street to the taxpayer. Collapse, once again, had become an opportunity for those who caused it. In 2019, Lebanon's banks locked their doors. Depositors were told their savings no longer existed. The currency lost over 90% of its value. Families who had worked a lifetime saw their money reduced to pocket change. And still, the debts remained. Hospitals begged for fuel. Supermarkets priced bread in dollars. The state collapsed, but the creditors endured. It was a brutal reminder. Your money in the bank is not a treasure chest. It is a loan you've made to an institution that might never pay you back. Those who survived best weren't the richest. They were the most skeptical. Those who held gold, property, or cash outside the system. Those who remembered that trust is the foundation of every currency, and that once it cracks, nothing paper can protect you. Today, the same architecture stands, only bigger, faster, and more fragile. Global debt has surpassed $300 trillion. Every government, every corporation, every citizen owes someone, and no one truly knows how it can ever be repaid. Central banks print, markets cheer, and the illusion continues. But illusions have a cost. Every dollar printed steals value from the last one. Every promise made with borrowed money mortgages the future, and one day the bill always comes due. So what survives when money fails? Not the currencies, not the promises. What survives are real assets and real abilities. Gold, land, food, skills, and independence. These outlast every empire, every collapse, every reset. When Rome fell, farmers survived. When France's assignats turned worthless, those who held grain or silver lived through the chaos. When hyperinflation struck Weimar Germany, those who owned property or traded goods rebuilt their lives from the ruins. Collapse doesn't end civilization. It resets it. And in every reset, wealth is not destroyed. It is transferred, from the many who trusted to the few who prepared, from paper hands to steady ones, from believers to skeptics. And now a new empire is rising, not of nations but of algorithms, digital currencies, artificial intelligence, programmable money. The next conquest will not be fought with coins or cannons, but with code. Control over currency will become control over choice. The line between money and surveillance will blur, and just like every empire before, the illusion will return, that this time the system is too advanced to fail. But history whispers the truth. Every system fails. Every currency dies. Every empire falls. The only question that matters is the same one that haunted every age. When the trust vanishes, what will you hold that's real? If this gave you a new way to see the world, subscribe to Financial Historian 2.0, where money, power, and history collide. Because history doesn't repeat, it compounds.